What's up, everybody? Michael and Coco here. You're watching episode 16 of the Weekly Scan.
The Weekly Scan.
The Weekly Scan is all about finding opportunities in the stock market for the week ahead. In today's episode, we're going to be using technical analysis to go over 7 different stocks. Now, as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience in the stock market, please ignore our opinions, because that's exactly what they are. They're just opinions. With all that said, let's go ahead and hop into today's show. Shoot! Welcome to the computer. Let's go ahead and hop into the charts. We're going to look over a total of 7 of them, starting with GDX. Now, this was on last week's scan, and what I kind of pointed out was somewhat of a falling wedge pattern. And now what I want to show you that's been taking place is we're kind of seeing this last day's performance on Fridays head peeking out of it. Now, it's not on tremendous volume by any means, but it did pick up relatively to the last 2 days of trading volume. So we're going to have to keep an eye on this to see if this falling wedge is actually going to be breaking out to the upside. And as you can see, this green line that's kind of going up here like that is the 20 period moving average. So that is all more confirmation that we would need. If the price closes above it, sometimes that can indicate some sort of a trend reversal. As far as the indicators go, we have the RSI not really showing us anything. It's not overbought or oversold, so that's good, which just basically means it has more room to go. And then the MACD, it's just about negative, but as you can see, the volume is kind of been tapering down, and it looks like it's trying to curl itself back up over. So we might see something similar to that take place. It's very possible. So I'll be keeping a close eye on this one. I am a big fan of the gold miners, especially during times like these. So and I like these type of patterns. Typically, what you want to see on these breakouts is a little bit more volume. So on come Monday morning, it's going to be interesting to see where this one plays out. All right, let's go to the next one. This one is ticker symbol USB for US Bank Corp. Now, this is actually very similar to a lot of the financials, a lot of the banks stocks right now. I saw Citigroup and Bank of America both high up on my scans. And the reason why is because they picked up just a significant amount of volume, and they formed a hammer candle. So if you go to those other charts that I just mentioned, which I didn't put in here, and I'll tell you why, they're going to have a hammer candle, and the chart's going to look pretty much just like this. Now, the reason I went with USB over the other ones is because the amount of volume was high, significantly higher than its previous 3 months. And as you can see on the Citigroup chart or the Bank of America chart, it was high, but it wasn't as high like this. So I just wanted to put more ideals in our favor. Now, keep in mind, like, these financials, especially these stocks like this, are very choppy. As you can see, you have a lot of up and down, up and down, up and down, up, and then, down and then up, little kind of momentum. So be very aware of that type of price movement and price action. Now, what I kind of see taking place is, if you look back in the history of the chart where this hammer candle formed, so we got right here, and I'm going to go all the way back to the history. Boom. So as you can see, it acted as resistance here. It acted as resistance here. It acted as resistance here. It finally broke out, came back, closed below it, and then quickly moved back up. And now it's acting as support again. So this is very interesting to me, especially with the high amount of volume forming this type of a hammer candle. So are we going to see a bounce is where I'm kind of going from this. And where the price action is placed on the chart provides itself a really good risk versus reward sort of trade, because you can simply just have your stop loss, below this support line. If you want to be very safe, you can have it under 37. Just keep in mind, how much risk you are actually putting on the table, because a small move like that from where it's at right now to where 37 is, that very small move is over $1 move per share. So if you're buying 500 shares of this, that's a $500 move. So keep that in mind while you're trading. You'd have relatively a small risk, like say, let's call that your risk right here, this box, to potentially see a lot of upside, let's call it all the way up to here. And it could go higher, obviously. It can go all the way to 45 by all means, because that's where it kind of topped off right there. But as you can see, this right here, if we're only risking this much to potentially earn that much, it creates itself a good risk versus reward trade. So I like this setup just because of where it's placed on the chart right now, the hammer candle and the high volume. I wouldn't be surprised to see this thing not work out, to be honest, and just crash lower. I mean, I can see financials acting like that. One thing that kind of makes me think that is you can kind of see a head and shoulders pattern kind of forming right here. So if it breaks that neckline, you might see it come down even lower. So you got to keep that into mind too. That's why we're saying keep your risk small. Keep your risk small on these things, but overall, it's still a decent setup. It's a good risk versus reward setup. Let's move on to the next one. SLM Holdings. All right, so this is actually very similar to the last chart. It's just a nice big hammer candle right here, which indicates some sort of a reversal potentially as far as the price action goes, and it was done on high volume. The MACD looks like it's kind of curling over to be bearish, but you know, these are lagging indicators, so you got to always keep that into mind too. The RSI indicator is not showing us much. It's just sitting there right in the middle. It's not overbought or oversold. So let's go ahead and look at support and resistances. It looked like it bounced right from this 740 area, so I want to go back into the history of the chart and see why that might have been. And as you can see in the history of the chart, that 740, 750, whatever you want to call it, let's call it 750 just for rounding purposes. It acted as resistance here. It acted as basically, when it broke above it right here, it really shot itself up, which happens on breakouts. And then it acted as, kind of just went sideways actually through this channel right over here, and then acted as support here, and now it's acting as support here once again. So this is setting itself up to be a potential good risk versus reward trade again. If you can get into shares a little bit lower here, have a tight stop loss, and say if the price runs up, you know, to $8.40, you're only risking, you know, this amount to potentially earn 3 times that. So it's a good risk versus reward setup. You know, 3 to 1 there. You're risking 1 to potentially earn 3. I like this setup. I would like to pick up the price just a little bit lower. You know, more closer to this where this area is, maybe like 751, 752, and then have a stop loss below that 740, maybe 738. Or if you really wanted to wait, you can potentially wait for even a deeper pullback, which is more into like this range here at the $7. I can see why you would want to do that. That's more than normal because we might see the price action come down to $7 and bounce from that point. So just depends on your risk tolerance and how you prefer to trade, but I can see both of those being a potential good setup. All right, let's move to next. All right, this is ticker symbol NGD for New Gold Incorporated. I just wanted to point out this level of support right here that the price is kind of floating around. And the reason why I think it's support is simply because we have the 50-day period moving average. And if you look back at the 50-day period moving average, by the way, that's that blue line right here like that. Boop. It acted as resistance here. And then when it broke above, it started pushing itself higher and higher. And then the green line is the 20-period moving average, and you can see how the price acts on the 20-period moving average, you know, basically moving up, up, up. It's kind of following that up, and then when it broke down, it really kind of came back down to backtest this area right here. This blue line going across the screen is at the dollar marker, and that's where the 50-period moving average is right here at this moment. And as you can see, it also acted as resistance right throughout this area. So this $1 area seems to be relevant on the chart. If I look at the indicators, the RSI, it's not giving us much at all. The MACD does look pretty bearish, and it's picking up some speed, but it's still above 0. So you gotta, you know, it's not fully bearish. This can very well not make it all the way to 0 and eventually turn back up to the upside. It's possible. And then we have a lot of volume coming into play right now on this specific last day of trading. This last day of trading, it's somewhat of an indecision candle. It didn't really know where to go, and the body kind of is just sitting where it opened. So we didn't have much price movement that day. It was up 0.9%, so not even a percent. And as you can see, the last 3 days have been kind of like bottoming out right here. So we might be seeing some sort of temporary bottom that might move itself higher. So how I would potentially trade this is I would like to get shares kind of just right above the high of this the low of this candle. So, you know, $1.06, $1.05, $1.07, somewhere around there. And then I would have a stop loss below the 50-period moving average. Let's call it, you know, 98 cents. You can expand that if, like, I don't like to have a lot of risk, so I always minimize it significantly, which there's a downside to that because sometimes it'll stop me out and then move up, but there's a good side because sometimes it'll stop me out and then just keep moving down. So it just depends on your strategy on how you would want to play that. But if you do enter shares right around this range, that's all you're risking right here. Let's call it that blue box. And then it could potentially run up, let's say, to, just $1.50. I mean, it's been there before, or maybe even $1.40 if you want to just be conservative. $1.40 is still all the way up there. So if you have only risking this much right here to potentially earn, all of that, that's a really good risk versus reward setup as well. I'm a fan of the miners. One other thing that I kind of just want to point out that's kind of bearish about this is you can see that it actually acted as a nice trend going upwards, kind of like a bull channel. I guess you can call it. It's a bull channel. And then it broke below it. And typically what you might see is a retest of that. So keep in mind that $1.30 level could be the retest. So if it comes up here, you might get it rejected to come back down. But overall, I am, bullish miners. I'm bullish gold, silver, and something like this with high volume. I wouldn't be surprised if it went back above the 200-day period moving average, and this was some sort of false breakout to continue more to the upside. But it's anybody's game. I just wanted to point that out as well. All right, let's go to the next one. All right, here's ticker symbol NBRV. This came up on a scanner for high volume. I just want to point out its previous history of all this volume that's really been picking up. And as you can see throughout that time period, there's been quite a bit of chop taking place here. So what we're looking for is where can the price action really go to? And as you can see with a pickup in volume, this dollar area is looking pretty nice. It acted as resistance here. It did break through once, and then it acted as resistance and then resistance. So how would you go about trading this? Well, if we do get a breakout on high volume, we might see this go from $1 to easily $1.20, which is a pretty large percentage point move right there. So you can play the breakout, or you can speculate in it and just see if there can be a stronger pull back and then speculate the price might go higher. So as you can see, it bounced from this 50 period moving average, the blue line there, and that's at about 67 cents, let's call it. No, it is 67 cents. So if I go back into the history of the chart, I can go like here. So basically at 70 cents, let's say. So if the price wants to come down here on Monday on 70 cents, I can have a tight stop loss underneath it, and I can play it like that. So I would be buying basically shares throughout this range, have that be my stop loss, and then potentially speculate that there's going to be a breakout. So that right there is a good risk versus reward setup in this little channel. But if it breaks out, holy moly, you can really see that thing scream. So there's a couple ways to play it. If you wait for the breakout on the high volume, I mean, with this, all this volume that's been accumulating, it does look like it's really setting itself up for a breakout above $1. But, nothing in this world here is really that certain. So that's how I would probably play it. I like speculating. So if the price comes down a little bit more and then I just have a tight stop loss, as you can see, the price swings on this previous day was really big. So if you were just in that for, a long position, you would have seen it go from 95 cents all the way down to 60 cents. That's a huge swing in a single day. So manage your risk there. Make sure your position size is accurate. A lot of volume taking place, and these shares are not that expensive. So don't get out of hand on something like this. Another level that I'm just kind of keeping an eye on is that 75 cents. It's just going across, as you can see, it kind of acts as resistance here, 75 cents, resistance here, and then resistance here, then support. So if the price comes down to 75 cents, that might be, the extent of as to where I'd enter in and scale into a position for a potential breakout to the upside. All right, let's go to the next one. Here's ticker symbol NUAN for Nuance Communications. This looks like it just is actually breaking out of the $24. I don't remember if I put this on my previous scan or not, but overall, it's in bullish context. As you can see, kind of just a channel moving upwards in the last 3 months like that, and then it kind of leveled out right here, and then we just saw this breakout. So, and it was a breakout on high volume. The MACD looks like it's crossing over. The RSI is kind of getting into overbought territory, so, make note of that. It doesn't mean that it's going to automatically just come right back down, but sometimes it holds above that for, for quite some time. Or can. So how would I trade this? Well, I wouldn't enter into it if it keeps moving higher. I would want to wait for it to come back to this $24 level. And the reason why is because once support is broken, once resistance is broken, it then becomes support. So you might be able to play some sort of back test to 24, have a tight stop loss, and then hope that the price continues to move higher from that point. That's how I would play it. Let's go ahead and move on to the next one. All right, so here is TTI for Tetra Technologies. This one has been just a wicked, wild sort of ride. You can't see in the previous history of the chart, but it did come up and then it shot back down. It shot way up and then came back down, and then it gets squeezed up to the upside from this 36-cent range all the way to 78 cents in just a matter of 3 days. So this is a wicked one, so you got to be careful on this one, but I want to say that it still looks like a decent setup. On the history of the chart, if you look at this level, probably about 35 cents, I'd say. Maybe just a little bit lower than that. As you can see, this level offers a lot of support and resistance throughout the chart. It acted as somewhat of a resistance right here. It went sideways right through this range. Resistance, then it acted as support, and it's acting as support here. And then, so really what I'm thinking is maybe if we can get the price come down lower to this 35 cent, or even, lower to 30 cents. I mean, 30 cents would offer some support too as well. It just depends on how you'd want to play this. Like if I go to 30 cents as well, you can see it kind of acted as support here and act as resistance. I guess we can just go halfway, say from 30 to 35 cents, let's call it 33 cents, and let's just go like that, just basically across it. Because then you have it acting as, resistance here, and then you have it as, or when it broke out, it really shot way up to the upside. So 33 cents, let's call it. So what we'd be hoping for is a pullback to this range and then a potential bounce from that point. We did have volume pick up tremendously, and the MACD's kind of curling itself over. It's still above zero, but not by much. So take note of that. But sometimes when this price comes down, as you can see to these levels, it really shoots itself up to the upside. Boom. And then back in the history of the chart, it did move up itself pretty high as well. So can we get another squeeze if it comes all the way down? It's very possible, but make sure you're monitoring your risk because this is a mover, okay? And it's a very cheap stock. It's 35 cents a share. So always, manage your risk. And whatever's comfortable for you. You just don't want to go all in on a single trade and hope to just hit it big. It's not about winning big in the stock market. It's about playing for the long game and being consecutive. All right, everybody, that's all I have for you. Those were the 7 charts. Hope you enjoyed today's video. I will see you on Monday for the S&P Technical Analysis Update. And if you don't watch those, I'll see you back here on the weekly scan next Saturday. See you later.